Where is heading the stock market in 2025? This is the foremost important question that each stock investor around is asking. And in order to shed some light on the data, today we are diving into the big takeaways from Bank of America latest global financial survey that tracks the mood of the largest institutional investors out there. But before doing so, don't forget to subscribe to the channel, leave a like and share this content with your friends to grow the community together. And now, let's begin. So let's start with a bold statement. According to Bank of America, stocks are the place to be in 2025. Yes, you heard well. According to BofA, stocks are expected to be the top performing assets next year, with 43% of the interviewed fund managers betting really big on them. So why the sudden shift in sentiment? The survey was conducted right after the US elections, just to highlight that optimism is back in a major way. In this regards, growth expectation rose from minus 22% in October all the way up to 28% in November. And it is not just about US stocks, but the global growth expectation rose 23% worldwide, the highest level since July 2021. And here is where things get even more interesting, so let's pay attention. Investors' preference towards US stocks hit a level that we haven't seen since 2013, with overweight positions jumping from a total of 10% to a solid 29%. Plus, small caps are gaining traction, with 35% of the respondents that are choosing small caps over large and mega caps. On the other hand, high yield bonds with, and listen well, 41% overweight. But now you can tell me that is too good to be true. Well, you are partially right. It is not all blue skies. Indeed, the Bank of America Bull and Bear indicator rose to 6.2, indicating optimism, still not at an extreme level, whereas extreme kicks in above 8, let's say. And while bullish catalysts include things like a boost in Chinese economy, as well as potential tax cuts in the US, there is also a big risk looming, with 50% of the investment funds flagging that a disorderly increase in bond yield could be a major threat for the market, followed of course by concern about a global trade war between China and the US, but not only. Well, this event has been considered as material by 35% of the interviewed investors, so not a negligible number. Another point to take into consideration is the preference towards cash of the investor base. Well, in the past month, we heard quite a lot the stance cash is king. And we also noticed that also Warren Buffett, that is not a fan of cash at all, piled up more than 300 billion in cash, divesting massively some of the largest position of Berkshire Hathaway, notably Apple and Bank of America. Well, recently things seem changing. In this regards, cash levels among investors also tell a story, since they rose slightly before the US election to 4.3%, but dropping to 4% immediately afterwards, suggesting that investors are cautiously stepping back into risky assets, such as stocks. So long story short, according to the survey of Bank of America, stocks may be the place to be in 2025, but with plenty of risks still on the table, I will say. And my tip here is to take 2025 as a year of strategic positioning and careful moves. So, if you are ready to go beyond the basics and level up your investing insights, before saying goodbye, hit that like button, subscribe to the channel and share this content, because this will help me a lot providing more videos like this one. Also, stay tuned for more deep dives into the market, always here on Beyond Alpha. Catch you in the next one. Cheers! And by the way, let me know what you think in the comments down below.